Hey everybody, this is Jim at SP500chart.com. It's about 4:15 on October 8th, 2013. Wow, what an ugly day. But let's take a look at it after I remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. And here's the 30-minute chart. Here is the symmetrical triangle that we were looking at yesterday, not knowing if it would break up or down, and because you don't know. In favor of the by the way, I've adjusted this line just a little bit to give us more benefit of the doubt. Okay, so because the 3 points that define this lower support line don't line up perfectly, so I moved them just a little bit to show that yes, indeed, by any definition of that November and June trend line, we are underneath it. And really we're underneath it by just a fraction less than 1%, so I would call that pretty much technically significant. But anyway, here's the scoop. We broke down out of this triangle. I thought there were some things in favor of the triangle, most importantly being the fact that it was actually forming right at about this line, which should give us some support. But that line's been around for what, 11 months now. Now it's broken. Interesting to note that today it ended the day after having bounced twice on this descending channel resistance line that now looks like it wants to serve at least as some support. But that being said, it's a descending line, and it's descending in a pretty sharp descent, at a pretty sharp angle. So we could stay on top of this line and in 2 weeks be around 1600. Okay, but since we're looking at just this pattern yesterday, and now we know we've broken down and we know where we've broken down from it, I'm going to measure the height of this pattern, and I'm going to go with this widest point right here where we got this first reactive move. And I'm going to show you that we're expecting from this pattern a target. Where's my tool? Right at about 1648, maybe call it 1650-ish. Okay, so this pattern alone really does not carry a lot of downside built into it. But I will say this, the fact that our really significantly long-term trend line right here has broken, I think that tells us that we can probably expect more downside than just what that little pattern shows. Okay? Because why would we go up for 11 months, break this, and then just lose 1.5%? That doesn't seem to make a lot of sense. So I'm going to get rid of this because we are now underneath our area where we were thinking we might get some decent gap support. We're underneath it. You'll remember that at one point we were looking at what looked to be maybe an inverted head and shoulders right here. You remember we talked about how many of these we've seen that didn't form a right shoulder, left shoulder. Excuse me, I moved that line. Maybe not that much. So left shoulder, head, breakout. Here we had left shoulder, head, breakout, almost like the opposite of a cup and handle pattern. We had the handle, then the cup, and then the move. Handle, cup, move. This time we had left shoulder, head, and we didn't go up. Instead, we broke down. Another thing that's interesting to note is if we go with this low down here and the low back in late August, early September, we are also underneath that line. So I'm kind of expecting for us to revisit some of these trend lines down around here. This blue line would be, I think, pretty important to keep. Because if this breaks, then we're looking at a potential of a breaking of the long-term trend. So guys, pretty ugly stuff. We may, with the exception of the fact that this bottom right here did not come all the way down to this neckline. If it did, if we had had a pattern where we'd come up, down to this line, up, down to this line, then up again, I would be saying watch out here for a triple top with a little bit of a rising trend to it. But we didn't have that come all the way down here, so that this makes for an interesting situation. I think we could get support here at this blue line, and if we do, we could come back on up. But right now, certainly the trend that we'd been in since November appears to be in jeopardy. And I would just be very careful. I stopped out of my SPY position. However, I am still in almost all of my other long positions, and on a pullback, I may lighten up on those, and then look to maybe buy back if we get down to this 1600 level right here. So guys, pretty ugly day, and like I said, the minimum we're going to get from this little pattern right here is going to be about 1650, 1649, 1648, something around that area. And if we come down there, will we bounce back up? If we do, I would expect this line now to serve as resistance. So looking kind of dicey right now. And adding to the fun is the fact that a lot of this, I think, is being unfortunately news driven by the impasse between the House of Representatives and the President. And I just want to say something on that. The President needs to negotiate, and he's not willing to. The House is willing to talk. The House is willing to look at things and, let's do this. And before you say, but that's not right, I would remind you, the House has constitutional powers. And one of those powers is that they control the purse strings. They control the budget. And, this would be like the president of a company having to go negotiate with the board of directors. And I just really think they need to sit down, and both sides need to work this out, because otherwise I don't think anything's going to happen, and we may just continue to slide down on that outlook. And of course, the markets don't like uncertainty, so until this is ironed out, we're probably going to be doing more of the same here. If it gets ironed out, we could rally quickly back up above this. So I think the word here would be to watch this closely. Just be careful. Oh, one more thing I wanted to show you. I was talking about this kind of a head and shoulders pattern back here that we had that never really formed that right shoulder. That neckline was right at about 1650. I think I had that on the chart a little while ago. I'm going to go ahead and put that back just in case we get a little support at that line. I'm going to make it very, very dim, however, because I wouldn't really expect much from all of what's taken place since then. I just wouldn't think there would be that much for it to offer. So the moral of the story is we are underneath this line now by a technically significant, well, almost a technically significant margin, lacking just a few points. So I would consider this line, if not broken, certainly in the process of breaking. So guys, be careful. Appreciate your watching this video, and I really do appreciate your support. Take care.